Sales tax is complicated. Not only do some states have sales tax, while others don't, but some sales are taxed differently than others. Furthermore, if you sell products or services across state lines, you'll need to understand the tax implications associated with interstate commerce. At Billy, our business is making things as easy as possible. In this video, I'll go through a couple of scenarios that will give you a better idea of how to set up your accounting system to properly collect, record, and remit sales tax payments. Please note that information contained in this video should not be construed as tax advice. You should always consult a certified professional to avoid making costly mistakes. In this example, we'll go through an example of an Oregon-based maintenance company that also does business in Washington and California. These states are very different when it comes to sales tax, so this example will highlight ways to overcome unique challenges in other jurisdictions. In Oregon, where Billy's U.S. headquarters is, we don't have sales tax. This makes invoicing and collecting a breeze, whether you're selling products or services. California has a sales tax on products of 7.5%. Washington has a sales tax system in which many of its services are subject to tax as well, one of only a few states where this is true. In this example, our maintenance company sells both products and services to our customers in these three states. I'll show you how to set up your sales tax settings to ensure consistency for all three jurisdictions. To get started, let's set up some sales tax rates in Billy. You'll want to navigate to Settings, Tax Rates, and then click on a Create Rate in the top right. Here, we'll add the sales tax rate for Washington. After giving it a name, a description, and a rate of 6.5%, we'll click Save. Next, we'll add a sales tax rate for California at a rate of 7.5%. Oregon doesn't have a sales tax, so we don't need to enter a rate. Now that we have our sales tax rate set up, we'll create two different rule sets, one for products and one for services. Rule sets tell Billy how to apply sales tax to products when they're added to an invoice based on the location of the customer. By building a rule set for both products and services, Billy will know which tax rate is applicable based on which product we're selling and who we're doing business with. Now, I'm going to create a product rule set which I'll assign to all of the products I sell. I'm going to click on the Create Rule Set button on the top right. After naming the rule set and providing a description, I'm ready to start adding rules. I note that in Washington, I'll need to apply the Washington sales tax rate for products, so I'll select the United States, then select Washington. Next, I'll indicate which sales tax rate to use for customers who are in Washington. I'll do the same thing for California and leave Oregon with no tax. Now that I'm done creating my rule set for products, I'll need to create my rule set for services. This rule set will be applied to the services my company offers. Note here I'll follow exactly the same steps, but I'll leave the tax field blank for both Oregon and California. This will ensure that sales tax isn't charged on services for Oregon or California-based companies. Great, now I have two rule sets, one for products and one for services. I can always edit or remove these by hovering over them and clicking on the pen and pad or trash can icon. Now, I'll make sure that my products are set up correctly in Billy. Jumping over to the product settings, I'm going to add the rule set to each of the products that our company sells. For installation service hours, which is a service, I'll make sure to add the sales tax for services rule set. And for my water heaters, I'll add the sales tax for products rule set. Now, as I invoice 3 different customers for the 2 same things, Billy will automatically pull the correct sales tax rates and apply them to the invoices. First, we'll invoice William Brown from Washington. You can see that when I add the installation service and water heater to the invoice, Billy automatically pulls the correct tax rate and calculates the tax that needs to be charged. Once we approve this invoice, we can click More and select Duplicate to create a new invoice just like this one. When we change the customer to Oscar, who's from Oregon, you can see that Billy does not assign a tax rate to either of these items. Let's approve this invoice and do this one more time. When we change the customer to Cal Fornis from California, we can see that sales tax has been applied for the product, but not the service. When we jump back to the invoices screen, we can see that the net amount for these 3 invoices is the same, but the balance, including tax, is different for each. Once we're done with our reporting period and we need to remit our sales tax returns, we'll need to go to Accounting and Sales Tax. When we click on the period we're in, we can see a concise list of our revenues and the amounts we owe each tax jurisdiction. Once we're sure that we have all of our invoices properly entered into Billy, we'll click the Settle button. Once we settle our balance, Billy will create a transaction that moves all of the sales tax from the collected account to the owed account. Now it's time to go pay what you owe. Once you've made your payments to the tax authorities, come back to this return to enter the date of your payment and which account it'll come from. Your sales tax return will now be marked as settled and paid. As I mentioned, sales tax can be complicated, but it doesn't have to be. So long as you set yourself up for success from the beginning, find a trusted advisor to help you navigate the ever-changing world of tax compliance, it can be smooth sailing. Feel free to let us know if you have any questions.